A lot of new investors who are coming into the crypto market are being hammered in terms of losses, and in fact I think that maybe 9 in 10 new investors coming into crypto end up with less money than they had going in. But what is it that is causing these losses? And in this video we're going to be exploring the reasons behind the increasing losses faced by crypto investors, and what can be done to try and improve the investors' chances of being successful in the space. So the first thing to understand is that in almost every asset market, and certainly every major asset market and asset class, we are living through a period of hyper-competitiveness. Never before in our history have we seen such a high level of participation and investment in markets by amateur investors, and this is driving up the values of real estate and stocks and cryptos as well. And higher prices and generally more competition means that it's harder to find undervalued cryptos. There are stocks which are trading at 1,000 times income, meaning that $1 million investment would yield an income return of around just $1,000 per year. And here in the UK in many areas, houses and apartments are selling for 20 or 30% more than this time last year, and I know that things are similar in the United States as well. And so it's important to understand that crypto is not in an isolated position, and new investors in pretty much every major market are facing the same struggles, and new investors in every market are failing at greater percentage rates than ever before, because of the higher levels of competition driving up prices and placing premiums on income and appreciation. And by the way, if you're a crypto investor and you're sick of people online endlessly hyping crypto without ever sharing the negatives as well, you may want to subscribe to this channel if you're looking for a level-headed and unbiased crypto analysis. So anyway, secondly, we have the fact that interest rates are lower than ever, and I think that many people are waking up to the realization that there is a significant possibility that rates will never be normalized, in fact that rates can't be normalized, and the only alternative that central banks and governments have is to reduce the value of the currency in which their national debts are denominated, and the way that they are doing this is through money printing and spending that money into the economy, which is happening all over the world in record amounts, especially in the United States. And of course, one of the consequences of printing money at unprecedented rates is the uncertainty that exists around inflation. Government measures suggest that inflation is not a problem, and in terms of the consumer price index it probably isn't. But to a growing number of people it's becoming clear that inflation isn't manifesting itself so much in consumer prices, but rather in the asset markets. And in addition to all of the new investors who have come into the crypto market over the last year, there are yet more people who have started investing into crypto, not for the income from the staking dividends or even to necessarily make a profit in real terms. But a lot of people have actually come into crypto to protect the value of their savings from inflation, as they perceive that crypto is a space which can offer a hedge against the declining value of dollars and other fiat currencies. And it's very hard as an investor to compete against somebody or a group of people who aren't even trying to make a profit but just match the rate of inflation. As an investor, matching the rate of inflation for me is not enough. I have to make something else on top of that which constitutes my profit, otherwise in real terms I'm no better off at the end of the year than at the beginning. And when a bunch of people come into the market who are only looking at best to match the rate of inflation, or just reduce their losses, they will be willing to pay much higher prices than I will, which reduces the number of potential investment candidates available to me and makes it harder to find profitable opportunities. And finally, the third major reason as to why a lot of new investors in crypto are losing money is because of the volatility that we have been seeing in the crypto market lately. The economy has done terribly over the last year, and nobody knows what the consequences of voluntarily closing down a large part of the entire economy will be. But at the same time, asset prices including crypto, stocks and real estate have been booming, and asset prices in all major asset classes are at all-time highs, and so there is a lot of uncertainty around what will happen over the next year. Some are saying that the money printing and cash being pumped into the market and record low interest rates will push prices up to even higher prices, while others are saying that we are due for a correction to rival the Great Depression of 1929, as market fundamentals are so far out of whack everywhere that we look. And with all of the uncertainty, market prices in crypto are hypersensitive at the moment, and prices are shooting up and down a lot more than would be the case during regular market conditions, and a lot of new investors do not know how to deal with volatility, and they are sucked into buying when the prices are rising and panic selling when they are falling 10 or 15% in an hour or two. And I think that a lot of new investors just don't have the experience to deal with a market which is so volatile and where there is so much competition. In summary, I'd say that we have a set of circumstances in play today which make the crypto market a very hard place to be for new investors. I've said myself before on this channel that I don't know what is coming in crypto, and I don't think that anybody does. A growing number of people, especially younger people, aren't interested in gold and silver as hedging assets anymore. They're looking at crypto and more as every year goes by. These are the people who are putting money into the markets as they enter into the workforce, and are promoted, and as the previous generations begin to retire and in many cases begin cashing out. And this is something which shouldn't be underestimated. Crypto and blockchain are immensely popular at the moment, and this may well be the tip of the iceberg in terms of what's to come. But then again, crypto prices have risen 10, 20 and in some cases 30 to 1 or more in market value over the last year. And whenever that has happened historically, a correction has followed, but again the circumstances are very different in this situation when compared with previous market cycles. Anyway, that's all for this video, but if you enjoyed and you think that you'd like to see more content like this in the future, be sure to subscribe to our channel and thank you for watching.